Welcome to Market Movers. I'm Jim Urio, and today we're talking about crude and its potential reaction to the reflation trade. Also, some mixed data from the weekly inventory numbers. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Scott, we've had some strong economic data. We've had mixed results of the stockpile numbers. We have OPEC talking about a production cut still. What's driving crude? What's going to take us out of this range?
It's funny. You said strong economic data. I would almost argue the data's been mixed at best. We had a weak GDP number for Q4 for the U.S. And the fundamental data you mentioned about the build in inventories, oil demand, still kind of choppy here. So it's been interesting since we saw that huge promise from OPEC and this big cut. It hasn't really had that big an effect on the crude inventories.
Normally when OPEC makes a promise of a production cut, I expect them to start cheating on it and have non-compliance happen within the week. This one, I think, is a little bit different. Saudi Arabia has much more interesting reasons for keeping crude oil higher this time. I'm talking about the Aramco deal. Now, before we dive into our trade discussion, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as a recommendation. Prices and movements are going to vary in the markets. When we're pricing this out, the April contract's about 53.5. Scott.
So I'm looking at a couple interesting things today, Jim, because I still am of the belief that we're going to see a lot of cool action in crude over the next month. So I'm actually looking out to the March 3rd expiries for my trade today. But I don't think it's going to really go anywhere at the end of the day. So I actually took a look at selling the 53 straddle. These are the weak ones. They expire March 3rd. This was with crude trading around 53.5 today. But I'm also putting on some protection. So I'm short that 53 straddle, but I'm putting on some protection by buying the 56 call along with the 50 put. So you have a little bit of range in which that oil price can move. So you're risking approximately $1,100 to gain $1,900 with the belief that it stays in that 50 to 56 range. You don't like it?
No, I like the way you're just that I look at this range, this consolidation period, and I'm looking for a breakout. I don't know that it will break out, but if it does, I think it's going to move relatively explosively. And I have 50 to 55 as my range. So I'm looking at buying the week one, also March 3rd, the 55.50. 56 even call spread for $120, 0.12. This trade risks the 120 you put up to make a potential 380. It goes off March 3rd. You get two different Wednesday inventory numbers, plus, and the kicker here, it goes off March 3rd. That's the non-farm payroll number. So if it's a strong number too, we might be able to build in some of that reflation.
And you've also identified a similar level on the charts too, with that 56 being maybe a top end, at least for some upward movement in crude if we get it finally. We've been waiting for it forever.
It would be interesting if it happens. So thank you for joining us in this special edition of Market Movers. I'm Jim Urio, where we're helping to make you a better trader.